Okay, guys, I think we will get started. We have a good number of people there. Again, thank you all for joining in the next knowledge session of the Digital Fifth. So, guys, a couple of weeks back, when the RBI came with this guidelines like Master Direction, Outsourcing, and Infrastructure Technology Services, we conducted an overview sessions a couple of weeks back on the same subject. This time, probably, we are going to talk more about how the REs like banks and the REs can take an approach to comply with the guidelines. Like what are the key considerations that they need to factor in? What are the checkpoint of the compliance that they need to be worry about it? So those directions that I will be trying to focus into that. And now I'll try to give you some guidance on that guidelines as well. But we'll just get started. And anytime whenever you have a question, please raise your hand. And or in case if you have any question, you can put it in the Q&A. I'll time to time I'll keep on taking on a break and keep on picking up the questions. So thank you guys. Thank you. So let's get started. So just quick introduction from my side. So Shashank Shekher from the Digital Fifth, I take care of the consulting. And then earlier I was with DCB Bank, where I used to manage the entire IT governance functions. Then move on to taking care of the infrastructure, data center, as well as then internet banking, the digital banking, and other services. Prior to that, I've always been governance and the compliance guy, where I work with L&T Infotech and the Wipro primarily into the cyber security, IT governance, and compliance services that working with mostly the BFSI companies. So that's been my profile. And then I joined the Digital Fifth. The Digital Fifth is a 6-year-old, the fintech and digital consulting firm. We are operating in from Mumbai, and we predominantly work in the digital space, digital and technology space in the BFSI segment. Four core services that we offer: the consulting, where that we work into different segments. I'll talk about some of the service line. Then we also work on the partnership arrangement, where many of the fintechs or the startups, they need to have any kind of the connect with the regulator, the lenders. That's where we help them into that. We also assist in the hiring of the senior positions across product, technology, digital, and the compliance. And then we do lots of the B2B training, where we train corporates across different areas, from the digital banking to open banking, payments, and technologies, compliance, and all the areas. There's just a snapshot of some of our customers where we have worked into different capacity, be it on the consulting, partnership, or the training. This is just a quick insight about that our market reach. So I'll just skip to the slides. And this is just a snapshot of our consulting services. So we provide deep into the digital advisory. We went to fintech and startup advisory services. We work with lots of the fintechs and the startup into the area where we work from product to the digital journeys across all the areas. We do lots of work in the open banking advisory. We're building the API strategy, open banking strategy, performing the benchmarking. And that's where this is one of the, again, core service, where the security and the compliance with respect to whether the gap analysis with respect to any regulatory guidelines, or you want to have a kind of the support on any kind of the certification process, or some kind of the audits with respect to the best practices, be it on the security, be it on the compliance. That's all the areas that we covered into that. Again, purely into the BFSI segment, again, with respect to technologies. And we do lots of the digital research and content management. So with this, just a quick intro, and then I'll just continue on the subjects, guys. So as we know, the April 10th, I think if I remember it correctly, when the RBI came with the guidelines on the outsourcing of our technology services, it's not that the first time RBI has come with the guidelines around the outsourcing, right? The earlier avatar, when the 2011, when the Gopal Krishnan committee was there, the report came, which was laid down the detailed guidelines, especially for the bank, because that was primarily targeted towards the banks, and where the one chapter was their outsourcing. But for the first time, that RBI came up with very independent guidelines on the master direction for the outsourcing of technology services, and expanded pretty wide into the across all the control areas that we come under the outsourcing. I think applicable date is that 1st of October 23, but there are different guidelines are there, different kind of the mechanisms are there. Like, for example, if your contract of all the outsourcing contract is getting renewed before 1st of October 2023, then it means that what are the controls are there mentioned in the guidelines. You need to ensure the compliance before October 10, 2024, right? And if this is coming on or before, after 1st of October 2023, no, 31st October 2023, then you have a 3 years of the span to put that entire the control framework in the place. But very surprisingly, if you are getting into any new contract after 31st October 23, then you have a 12 months of the window to get that all the controls compliance with respect to that guidelines. But always the question is coming that why the RBI has came with a very targeted, very focused circular on the outsourcing, right? So a couple of reasons are there. If you try to look at the trends and all this, the market, how this is transitioning, there is a deep increase in the technology adoption and complexities, right? The banks are, or all the REs are spending lots of the money on the technologies, right? Industry has seen some of the challenges with respect to the migrations, some of the migration where that outsourcing partner has been involved. So that has been also could be a good pointer to the RBI to bring out some of the mechanisms that such kind of the risks are not there in the REs, especially with the banks or the NBFCs. There has been multiple new players. The platforms has emerged. The one hand, that entire the banking ecosystem has evolved from the banks to small finance bank to the payment banks and other players. Same time, you have the technology size space, you have lots of the emergence of the new players compared to 2011. Like 2011, the cloud was not as deep, as penetrated, but today cloud adoption, the SaaS adoption is heavily into that market, right? So that's the reason banks are heavily looking into the outsourcing opportunities to complement their core technology services, and they would like to focus more on the engineering side of it, while the technology management can be taken care by the third parties. Continuity of the operational resilience because business resilience is now directly linked to the technology resilience, right? And technology resilience has a high dependence on how the partner is going to support you during the process. So there is a huge focus on operational resilience. There is increased demand of the customer on the digital channels, right? Very rightly, we all looking for that UPI transaction to happen anytime during the day, right? Even in the midnight, we expect that transaction to go through. That's kind of the business that we are into that, and it's required that continuity of the services and outsourcing partners to continue to provide the services 24/7 across throughout the year, right? And the cloud adoptions. But what are the, at the same time, when the circular came and the timelines are there, it brings lots of the challenges for the REs also, right? Because now it's a very structured regulations across the compliance to take care into the contracts. There's going to be definitely increase in the regulator scrutiny for those contracts, right? They would like to get deeper into that, looking into whether the audit has been performed, the audit points have been closed. They would like to look at the risk assessment carried out, the due diligence reports have been there or not there, right? So there will be an increase in regulator scrutiny. REs will need to find out a right balance between the service delivery and the risk management, because try to put an overemphasis on the deep control and the very complex control structure, you may have an impact on the service delivery. If you try to lose on the service delivery, then you may have a compromise on the risk. So you will have to back a balance. There is huge pressure to perform a regular audit, risk assessment. You need to reevaluate each of the arrangement. That's because some of this you may need to relook at it, right? Skill set to manage the contractual obligations is not going to be easy, because the guys to understand the different kind of the environment, different kind of the complexity is always challenge. Why I'm able to talk about it, because in the earlier in the bank, I have managed those contracts on myself. So now on one hand, I was used to take care of the governance. On the other hand, I used to manage some of the contract, be it on the ATM, be it on the data center operation, be it on the FMS services or any application related contracts. Those are really not easy to put in place, right? While at the same time, you have to continue to struggle to get the service delivered from the partner, but at the same time, you need to make sure the controls are being appropriately levied on the partners, right? And there is going to be continuous optimization of effort to continue to drive digital transformation, because you can't compromise on your digital transformation effort. So how do you going to balance the effort between compliance as well as the digital transformation? That you need to look into that. Quick impact, I think more and more very simple, that you will have a good control environment to be implemented. You need to put a kind of the efforts to ensure that compliance is in place. While the banks, since because of the Gopalakrishnan committee, they're in a good shape to have the most of the controls in place, at least partly or in the some of other forms, right? Challenge will be for a small finance bank or the payment bank, because they might have already been referring to the guidelines and putting some of the controls, but now they will have to relook that entire approach and then rebuild that entire the governance framework and the control frameworks. More importantly, I think it will be a fresh start for most of the NBFCs, CICs, urban cooperative banks and all this thing, where since they have been continuously increasing the technology investment, they are more onto outsourcing partnership. Also very open to the cloud adoption. I think that responsibility lies much larger to these entities. Well, these are the recipient side of the players, while the service provider also will face an impact, right? Because they will need to right now align that entire service delivery to ensure that they are able to support the customers in the compliance efforts, right? Because if the customers struggle on the compliance effort, it means that the struggle is at your business end. So that's where the challenge will be there. So this is that what we are right now. So we have engaged with a couple of banks and we are talking to some of the players to help them into the building the compliance with respect to these guidelines, be it on the as-is studies, try to assess that what are the gaps with respect to what are the controls that you may have, be it on the IT outsourcing policy, maybe the some kind of the risk management framework, BCPDR you have or you don't have, and then looking at what are the gaps with respect to this control. And then also continuously, regularly doing a compliance reviews, help into the building the design of the control framework, be it on writing IT outsourcing policy, developing the BCPDR, developing the risk management framework, due diligence checklist, and all these things. That we help you to do that, and then also help you to perform that regular monitoring of those controls which have been implemented. So that's our value propositions. I'll just skip this slide. This is primarily, I think, more or less I've covered about that you need to ensure the compliance service framework. That's a goal that you need to achieve as you move into the journeys to build the compliance with respect to that framework, right? Understand the gap better, because that's very important. You need to understand the nuances of this regulation, the impact of this regulation, because it's very from the materiality to service deliveries or the service partner kind of the arrangements, because everything you can't compare in the one single thread. So you will have to very carefully thread on that path to identify the right set of the partner, the categorize them, apply the controls, understand the gaps, and then continue to build the mitigations, right? The right policy and the risk management framework, again, because you need to cater to the diversity of the part player, diversity of the services which has been outsourced, right? And also the business impact, where the material impact comes into the place. And overall, improving the governance framework. That's because entire objectives. And you need to look into that this guidelines, just an suggestion, because RBI has already launched a draft guidelines on the entire IT governance, information security, audit, and all this thing in the September, which also anticipated to come as a master direction in the couple of months' time. It's here and there, which is again that's a kind of the refined avatar of earlier the Gopal Krishnan committee. So you need to make a balance between all the thing regulations with respect to the technology management. How this entire the chapter? So I'm not going to deep into the each of the controls, because I've already taken the sessions, and you may refer to our the YouTube channel in case if you have missed out where that we have gone through the detailed overview of each of the chapter. But these are the just a quick walkthrough again as a summary. So primarily providing the backdrop of these regulations, the role of regulated entities, and regulated entities are very clearly called out. Having a right governance frameworks, including that entire the board structure, roles and responsibilities, putting a right evaluation and engagement of the service provider, good detailed out outsourcing agreements, and I'll talk about a few of the elements like what you need to support, because that's my focus area for the today. We're guiding you that what are the approach that you should follow to meet the compliance requirement for this circular, right? Having a right risk management. So there's a detailed chapter on the risk management, monitoring and control of outsourcing activities, outsourcing within a group and cross-border outsourcing. Also, this two chapters have been called out because it may not apply to all the REs, but it may be definitely applicable to the few of them which are operating into the group structure, or they may be getting the services from any partner who are not residing in India, but they are providing them some kind of the support or some kind of the services to you. And very strongly, this and they have emphasized on the exit strategy, that if you are into any kind of the contract for IT services, you need to be focused into that. How do you exit in case of any major challenge comes up with the partner? And now I'm not talking here, but one of the very separate chapter has been called on the cloud adoption. I think that's a very major shift in the thought process. If you look at from the RBI, that I think like many of the REs always struggle that, okay, whether we should go to the cloud or not to go to the cloud. What are the guidelines that I need to adhere to? What are the controls requirements that I may need to look into that when I'm moving to cloud? I think this guideline gives a clear direction that you go to the cloud, but follow these guidelines, right? At least that clarity is there, that these are the 10 things that you need to do when you're moving to the cloud. So I think this is a good steps in the directions. and which is assumed to be pushing that lots of cloud adoption in the BFSI segments in the coming year. This is just applicable to RE. So highlighted earlier one which I was talking about is only to apply to the scheduled commercial bank, while the small finance bank and payments bank, as soon as they came, they started following those guidelines. But these guidelines have been very clearly called out to all the players into the market, and also the credit information companies and like all the bureaus also coming into the space. This is just a snapshot of the applicability and non-applicable activities. That's also where the first time they try to clarify some of the elements. Still may have some kind of the doubt, some kind of the confusion. But I think once you start getting into the compliance structure, you will get the clarity. So now I'm just moving to the focus areas for the today's sessions, where I'm going to spend more time onto what are the approach of the REs that we should follow, as be it on the bank, be it on the NBFCs, or any kind of the REs you are coming under the circulars, what we should be following. So, but before that, I'll take a pause. If in case any questions or any hands are there, I will be happy to pick it up. Anybody wants to ask any question or anything? Can NBFC A, Sagar Dua is asking question, NBFC A outsources IT infrastructure, having said it is the main component of the business. See, any REs can outsource its infrastructure, right? Even now, say for example, you may be setting up the entire platforms, maybe on the cloud itself, right? So if the cloud you are applying, then definitely you need to adhere to that guidelines. But in lots of the components, like say for example, if you are an on-premise data center and you may be providing that, outsourcing that entire the data center operations, or maybe you're getting into the hosting of the data center, you may do that. And if you are doing that, it applies to you, right? So NBFCs will apply. While the other question when it comes to that, I think there was another questions coming, I could see somewhere, right? In the chat box. Yeah, in the chat, I can see that. I'm sorry, I'm not able to see the questions. Okay. Okay, Vikrant is helping. Is this applicable to payment aggregator? Okay, so at least in this circular, they have not called out the payment aggregator very specifically when it comes to the applicable entities. But ideally, if you are under the regulated entities, you should, as a best practices, maybe try to pick up some of this control environment from the guidelines. It's always a best practice. Any other question, guys? If not, so let's get started because that's the very focus area, and that's where that most of the REs that I'm talking to are struggling to put up on a right framework to how to go about it. Like it's not easy, right? Now it's a very small 20-page kind of the circular, like maybe 100, 120 controls will be there. But how do you going to apply to that? Because again, the diversity of the contracts, right? You may have the complex like ATM switch management contract to the very small that you have just outsourced some of the development efforts with some body shopping kind of the players, right? So that's kind of the variation it can have, right? So first, I think more important it will be that you go and perform a gap assessment, try to look at that the controls across all the domain chapter that I've been spoken about. Try to look at that what is applicable, what is not applicable. Again, applicability based on the category of the players, outsourcing partners that you may have. Identify the gaps with respect to policies, with respect to existing contract arrangements, contract also look at that what are the gaps could be there. Build a complete procedural and contractual recommendations, like that you build that entire what are the gaps that action that you need to take to plug on the gaps. Develop that and build a kind of the roadmap that's how you're going to do the implementation. Because as I said, the deadlines, like for majority of the 90% of the contracts currently which is existing there, which may be getting renewed before 31st of October, you may have only 6 months window to do the implementation of all the controls, right? By 10th of October, definitely you need to get it ready by 2024. Then once you have understand that what are the gaps are there, go and design and rebuild that entire control framework. Why I'm saying rebuild? Because majority of the things that you may already have, right? Say for example, IT outsourcing policy, you may have some form or the other. It may not be very comprehensive. You may have already as an outsourcing policy at the bank level where that all kind of the outsourcing that you may be talking, including the financial services, where now the entire emphasis will be to carve out a very separate IT outsourcing policy, which is again approved by the board, right? So that's where that you start rebuilding, right? So put up the governance structure, redefine the terms of reference, rebuild the IT outsourcing policies, develop the entire, or maybe redesign your entire risk management framework, business continuity, DR framework, build that entire the risk management framework, that how you're going to identify the risk, how you're going to mitigate the risk, how you're going to monitor the risk, and also go and perform the risk assessment. But that will be more in the implementation. But here I'm talking about that entire design and development of the control frameworks, right? Build a complete evaluation and the monitoring mechanism, because due diligence has been put on a very emphasis on this during the circular. And go on the build a rollout plan, like how you're going to do the implementation across partner by partner, right? So you need to figure it out. How do you going to do that? You may require to identify the owners that who will help you to pick up those elements for the implementation. Because what are the control framework that you have designed, you need to carve out the action item, and then applicable to the partners to partner, you will have to go and start doing the implementation. And not only that, then you will have to also go and do the supervision for that. So that's primarily the approach that you will be picking up. So I'll just go to the very specific to each one of the things. I'll not talk about more on the basic on the requirement, because I'm sure that you may have some idea, but I'll more focus on what action that you need to take up and what are the checkpoints that you need to focus on. Like, so let's say become the governance. So governance, where that one of the specific requirement is that you need to have the board approved IT outsourcing policy, right? And also very clearly carved out that roles and responsibilities for board. And when you say board, including the IT strategy committee, because IT strategy committee is primarily an identified board bodies to given a responsibility to oversight the entire technology management function for the banks or any REs, right? Many of the REs may not have any kind of the, especially the other than banks and some of these NBFCs, many of them not have the IT strategy committee, then it fall to the board, right? And build a complete oversight and assurance management and inventory of the services partner. So what are the action that you need to do? Go and look at your IT policy, outsourcing policy, realign it, and present it to the board for the approval. And that should be done as early as possible, because you have to factor in the time for implementation. Because when the deadlines come, I have faced the multiple RBI audits, be it on the technology management, be it on the contract side of it, right? When the time comes from the compliance, they will not accept that, okay, this is partly there, partly not there kind of thing. You can't say that, okay, I have IT outsourcing policy, this has been approved by the senior management, but it has yet to be presented to the board. No, you need to be there. But why I'm saying that it should be approved as early as possible, because now you need to pull out that action item from the board policy and then go to implement on the ground, right? For that, you will require at least 6 to 8 months of the window time. So that's where the challenge will come. So policy has to get approved, define the terms of reference for each of the bodies like IT study committees, training committees, CIOs, CTOs, into very clearly. Build a procedure that how you're going to implement the policy. Because policy, you will have lots of the mandate that you will put in place, and then you need to figure it out that how you're going to do the implementation, and conduct the training workshop for the stakeholders, product owners, the contract owners, the contract monitoring representatives, those respective bodies. You need to bring everybody into the forum and let them understand the control requirements, risk requirements, everything, right? And prepare review and monitoring mechanism. So these are like action plan with respect to governance, but put it clearly, like how you're going to demonstrate the checkpoint. And it may not be comprehensive, guys. I'll put a disclaimer that this is for the knowledge sessions. When you go into the deeper, you will find out lots of the dimensions. But I'm just, it's a kind of glimpse that I'm trying to give you to understand that what it will require, right? So checkpoint for compliance, definitely you need to have the IT outsourcing as an agenda item into the board meetings, right? There has to be a very clearly called out the minutes of the board where the policy has been presented and policy has been approved. It could also should capture that if any guidance has come from the board, right? You should have a very great schedules for all the meetings that will have the agenda for the related IT outsourcing, and definitely having a very clearly documented service and partner inventory, time mapped with respect to like all the partners, with respect to contract numbers, contract details, type of services, some of the parameters that you should create in the inventory. So that's a part of the governance framework. Okay. Then second, evaluation and engagement of service provider, which is again as a major component where that they're trying to emphasize that you need to have a very clear, called strong due diligence framework, right? Due diligence, like whenever you're trying to identify any partners, you have done the proper evaluation, you have done the proper due diligence checklist. And what are the things that at least broadly, you should look at that whether the customer, the partner has the relevant experience, that he has the right reputation in terms of business, in terms of the delivery is there. financial soundness is there, that super partner is having a right kind of the financial status so that it can continue to provide you the services. Many times it happens that we have experienced that partner may not have the sufficient financial soundness and may have a challenge of the holding of the resources, right? And if they are not able to hold the resources right, they may have the compromise in the salary, and they may have a compromise in the resources that pick it up from the market and they deploy in your accounts, which will ultimately lead to the delivery issues with respect to the services that they are providing. So financial soundness is very important. Look at all the external factors which may require to look into that specifically contract, and the technology consideration and regulatory and legal requirements. So these are some of the aspects that you need to focus on the due diligence. So what are the, and it's all depend on the materiality, right? So when you do the due diligence, you may not be applied to the same checklist formula to across all those kind of the partners, right? Like the security operations center, if the partner is managing, he may have a wider coverage, while the ATM switch provider may have another wider coverage. But say, for example, anybody is only providing the branch level printer support. I'm just taking an example, branch level printer support. Then you may not have to have the such kind of the deeper coverage, right? So materiality, identification, and mapping to the checklist, right? So what are the action plan? That first, it should be important that you develop the materiality assessment, that how you're going to identify the materiality. And materiality is like kind of the impact that bank can have, right? Very simple terms, like how critical that business or the outsourcing services or the partner is there to your business, right? So that's very important. And then develop the due diligence checklist covering these all the parameters that have been speaking about, and align to the materiality at the category of the services, right? So that when you are not running that entire, like say, for example, 200 checklists to across all the partners and continue to come back as a not applicable, then it becomes very difficult. And in case if any pointer that you are excluding for any categorization services, you need to have the rationale behind it, that why you are not excluding it. I've seen in the most of the practices, the bank or the AREs will have a one single formula, one single checklist, and it applies to all category of the partners, right? Also having a very clearly called out vendor evaluation parameters, that how you're going to monitor. I'm sure that now RBI will start looking at very specifically that you have a vendor evaluations, and especially for the material contract, right? Some of the checklists that you need to be very cognizant of, that primarily will be used to demonstrate your capability that, okay, you are complying with the guidelines. So have an approved due diligence checklist, which has been approved and is mapped to materiality. As per the vendor list, you should have that very clearly called out due diligence report for each one of them, right? So that's also, and it has to be due diligence report when you are prepared. So it should have the kind of the maker checker, so somebody has looked at it, somebody has collated that on information, and somebody has reviewed and verified that. Right? It should not be like in a documentation purpose that somebody has filled the information and keep it as a record, right? RBI may not like it. They are smart enough to figure it out. And the risk deviation, in case certain due diligence, you may figure it out that there is a some kind of deviation that you need to focus on. You need to focus on, and you're not able to adhere to. Like, so for example, you need to take an exceptions. And if it's not a serious one and you want to take an exceptions, you go to the board or you go to the approval mechanism, take the exception, and also try to bring out some kind of the mitigation factors that you may consider in case there is a deviations, right? So these are some of the checkpoints that you may be cognizant of when you are trying to build an entire evaluation and engaging into the service providers. So what I'll do, I'll take it again a pause because I can see a few questions coming up. Yeah. Okay. So Sagar do has another questions. Sagar, you rightly called out that base layer. So last year when the RBI came with the guidelines to categorize the NBFCs into the three categories, upper, medium, and the base layers. Yes, it's not applied to the base layer. It's primarily applied to the upper and the medium layer. It doesn't mean the base layer NBFC cannot outsource. They can definitely outsource, right? And they may be outsourcing it to. Right now, at the compliance perspective, they may not need to be adhered to the guidelines, and they may not be coming into the supervisory scrutiny as part of this kind of the regulation, right? Because it may be pretty small. Their technology services also may be very minimal. So that's why primarily they have tried to, and it may not have the material impact also into their business. That's primarily when the base layer you try to look at it. So your understanding is right, but they can outsource, and but the control will not apply because of the reason that the reason is very specific, that they may not have too much of the technologies. Okay, clarification or standardization of the duty. I don't know the question coming from anonymous. So clarification, the standardization of the due diligence practice. Due diligence is standardized across organizations, or is companies have the flexibility? Okay, so there's no guidelines for the due diligence, right? It's all coming from the practice. They have given a base pointers that what are the things that you should be looking into that. And that's where you need to define it. Like, for example, business financial soundness, they will not talk about it, but you need to go and put a checklist like, okay, their business is growing, right? So that's a very simple, so it's all has to align with the market practice, your understanding from the market, working with a partner, working with the contracts. Then if you have that kind of understanding, you'll be able to build that. And that's where partners like we also come into the pictures. We help the REs, and we're right now also engaged in help with the REs in defining those checklists from that, what are the pointers that RBI has suggested. But you may not find it on the readily available checklist, guys. Okay. Okay, Nishant is having a question. Do IT outsource partner can also make a framework or prepare themselves to make a pitch for the bank take competitive exam? Okay, it's very interesting questions. That's I've been talking about that. Definitely, it will give them the edge, right? If any IT partner or the technology service provider, if they can provide a kind of the assurance, because that will be the top of the mind of the technology's decision makers when you start talking to them. So that definitely provide you an edge. And Rakesh asking, can we get any kind of checklist going through the direction? It will be very subjective in nature. So as already given, right? It's not, you may not find any checklist readily available. You need to go and bring out that subjectivity, create a very objective checklist, right? And that's where that you need to put kind of the expertise. You may not find out, and we don't have, I mean, we will have, but it's very difficult to share, Rakesh, that kind of checklist, right? Okay, guys, so we have almost halfway through the session, and I'll continue to go back, and please keep on throwing the question, and also you may raise your hand in case you have any questions. Meanwhile, my team has already put on the feedback form. Request you to please fill up your feedback form. Feedback is always very critical. It keeps on motivating us, and it keeps on pushing us to keep coming back to you and keep on taking some of the knowledge sessions, right? Ideally, which department in, again, question from Rakesh, ideally, which department in RE should be conducting the due diligence, and which department be validating the vendor due diligence? So there's no guidelines, but as I said, that the concerned department who is engaging with, because now everything has to drive from the IT outsourcing policy. You may try to put up a kind of IT outsourcing policy. There is, if you look at it, Gopal Krishnan committee and all this thing, it's also suggests for having an IT governance functions, right? So maybe you try to combine that some responsibility to IT governance, but ultimately responsibility will lies with the teams who is trying to partner with that kind of the service provider, right? And IT governance guys from the department or from the CISO department can have the checker responsibility to check that the due diligence has been properly performed or not, right? So that's my understanding, and I think it should work. So I'll continue, and then guys, I'll come back. Okay. So outsourcing contract. So definitely this is one of the major emphasis has been put into that, where that you need to look into the outsourcing contract. They have again defined that all the critical requirement that should be part of the outsourcing agreements, right? What are the action plan? That first, having a proper agreements. If you already have, then well and good. Then go back and check with the legal department, look into the compliance requirement and see that your current agreements template which is there is currently covering. If not, then what you will need to do that, go back and review all the contracts, try to identify what are the gaps are there with respect to the compliance requirement for the agreement, and then try to look for the missing elements which are there, and then try to figure it out that how you can engage with the partners to get that contract revised, to get those elements included into that contract, right? And also at the same time, go back and update your master contract template that you may have to align with this regulations, right? And also once they gaps has been identified, you started with a partner, you may need to put up a time frame, right? Because all the contract, you may not be able to make the amendment in a particular time frame, right? So you may need to put a kind of an implementation roadmap that how you're going to engage and how you're going to make the partner agree to some of these elements, which is being a compliance requirement, right? And in case, in the certain cases, and that's again coming from my experience of the running the contracts as well as the managing the governance, because many times some of those elements in certain of the contract, you may not be able to agree within that stipulated time. I'm not saying that you may not be agree, but in case if you are not able to agree within that stipulated time, it may have some commercial obligations. What you can do that, add it as a risk register, okay? Go back to the board, go back to the approving authority, take an exception approval, right? And taken a time bound kind of an exception approval where that within that particular time, you will go back and do the implementation or do the changes to the contract. So these are the practical learnings that primarily I'm just sharing that you may need to follow through. What are the checkpoints for the compliance? What are the best practices that you should have that create a checklist of the agreement clauses which are there as per the guidelines? Map it each of the contract, maybe 10, 15, whatever is there, create a kind of the metrics where that you try to map that, okay, what are the contracts covering that all the checklist points. And in case wherever that gaps are there, you know that these are the 10 contracts where that 5, 4, 3 elements are missing, and then create an action plan. So that's registered, make it, and then keep on updating that register. You may, when the regulator comes for the audit and all this thing, you can share with this kind of thing is that handy, and he may try to pick it up any of the sample contract where he will try to see that, okay, you have make those changes as per the compliance requirements, right? So that's there. So continue to and create a tracker. So say, for example, as I was talking that you may not be able to do that all the contract amendment in one go. So first, once you have identified, put up an implementation plan, that put up a kind of the evidence that you are already initiated the dialogues with the partners. You have into the certain stage to make those amendments, right? Because I know that some of the contract, when it goes through the amendment, the legal teams comes into the picture on the both the sides. Larger the partner, larger the time it may take for the making those amendments. It's not an easy task, right? And typically the technology team has to balance between their time and efforts to get this contract done. So you may miss out certain of the elements. Ideally, you should not. But in case if you are missing out, make an exceptions, go and take an approval. This is this is the major areas, right? So one is the requirements. So they build the complete, this is on the control side of it, right? This is the actual control side. So have a proper risk management framework that how you're going to identify the risk, okay? And it could vary from across all the board, strategy, technology, financial, operational. I've listed few of the things, but it could range from people-related risk, the financial risk, audit risk. It could be anything, right? So you should be able to identify those risks, able to manage those risks, understand the impact of the risk, put up a mitigation plan with respect to each of the contract, and then monitor those risks, right? So have a risk management framework and go back and perform those risk assessments, right? What are the risk assessment methodology that you will define to address that, all the identify and manage that risk related to contracts? You should do that, and then put up an mitigation plan, and then also have a strong third-party risk management framework, robust BCP and DR plan, incident reporting mechanisms, monitoring framework, and also build the termination clauses with respect to or the exit mechanism, right? What are the checkpoints? So definitely you need to have all these control documents that we have been talking about, like risk management document, BCP, DR, and everything. So you should have the board approved document in the place, right? Which is again mapped to the IT outsourcing policy. And then subsequently the implementation item from these of the documents, like for example, risk assessment, to go and perform the risk assessment for each of the contract. Again, it will vary from the materiality, right? Material vendor to vendor, and then have those records available that, okay, you have performed the risk assessment. These were the 10 risks. Out of the 10 risks, 8 risks have been closed, 2 risks is still open. The timelines is there. Vendor is taking the action. You should be able to demonstrate those kind of the risk, open risk or the closed risk, right? If any cybersecurity incidents happen on the partner side, they should be reporting you and within the certain stipulated time, as has been suggested in the contract. Have a risk acceptance record for the open risk, as I've been talking about, documented BCP DR with approval. Also, the BCP DR drill reports from the partners, because that's also where that I'm facing that many of the guys will struggle, where that you need to go and get this BCP DR drills report from the partners, because lots of emphasis has been put on that continuity of the business, right? Resilience part of it. And also you should be having some kind of the BCP DR drill, which is mapped to the partner. Like, so for example, ATM switch, right? Very classic example. So most of the banks will have the ATM out service switch outsourced. Now you should have the DR drill of select payments with respect to your switch partner. So along the switch partner, you should be doing some kind of the DR drill, like their services also goes down, plant goes down in a certain time, and at the same time, your also operation goes down, and how to both the party able to recover the business at the respective end, right? So that's why you should be looking into that, some of this compliance, and you should be able to demonstrate, right? Just a snapshot. Just a snapshot that you should have the policy framework. Most of the thing I've already spoken about, right? And when about policy, security policy, vendor management policy, and everything should be there. Risk management, I already spoken about the BCPDR, right? So these are like just a single slide snapshot. So guys, again, request you to share your feedback. Those who share the feedback will sharing this deck, which you can use as a reference document when in case if you are planning for any kind of an compliance. Yeah, so I'll take a pause again and we'll see the questions. Yeah, Sagar, good that now you raise your hand and we would love to hear the question from you rather than typing. So maybe team, if you can help Sagar to speak.
Hi, Shashank. Thank you for the insightful session. My question is, so this is basically that in relation to that NBFC account aggregator only. So I could not completely understand your thoughts on the outsourcing of IT services. So basically, my question is more towards, as you may be aware that the entire business structure of the account aggregator works on the IT framework only. So
Yes.
I want to understand to what extent this IT framework can be outsourced. So as I understand that the materiality of the operations has to be taken care while outsourcing things. So I just want to hear out your thoughts on this topic.
So Sagar, this is very specific. Okay, so I'll try to
So
attempt it. This
I
is
am
not.
not able to hear you.
Sagar, can you hear me? Uh, yeah, I think others can hear me. Sagar, can you hear me?
So your voice is still not audible.
Okay, maybe Sagar, I'll connect with you separately. Sakshi, if you can send out a message and I may have a separate one-on-one call with Sagar. Just send a message to him. I think he's facing a challenge, but I assume that everybody else is able to hear. Okay, Rakesh is asking, will you be able to share this PPT? Rakesh, as I said, those who share the feedback, because feedback helps us to improve, right? That's where that we are greedy about the feedback. So those who share the feedback, we share that deck with you and we'll do that. Yeah, thank you, Sandil. So I think Sagar, I'll connect back with you. Maybe Sakshi will just send him a message. So I'll just take a quick 5 minutes more to just close on some of these slides, some of the other control areas, and then I'll come back to the questions, guys. So this was on the control framework. Now there's a couple of others like monitoring and control of outsourcing activities. So now you have onboarded the partners, you have deployed the controls, but now you need to continue to monitor the services. So requirements are very clear that you need to put up on a management structure with roles and responsibility. Then how you're going to monitor and continue to monitor the control which have been deployed for these outsourcing activities, right? And also they're very clearly calling out that audit to perform the third-party audit. Again, it will depend on the kind of the audit that you need to do based on the materiality, right? And also first time they have suggested that some of these REs may have the pooled audit if in case there is a single partner who is providing the services, but you need to figure out the mechanism that how the pooled audit can be performed, right? What are action plans? So definitely as an RE, what you need to do that you need to create a monitoring and control checklist, right? So need to define that, okay, how you going to monitor, how do you going to see that your controls are working? So kind of the checklist where that you collect certain of the documents, and it could be part of the IT governance teams, which is managing that entire the compliance structure, right? Or it could be again the maker checker where that the contracting business unit which is there, they may collect the information because they will be doing the ground monitoring, right? They collect the information and somebody doing the verification that all the details have been rightly captured. There is a substantial evidence is also being supported to provide support to those items which have been filled in the checklist, right? So you need, once you have created the checklist, then you need to have that records that, okay, you have performed these monitoring assessments, right? And also your teams is aligned for the auditing. So you need to identify the audit. You may have the control assessment check or the auditor may help you to build the check. checklist, and then you're deploying and getting the audit done. So these are like action plans. Checkpoint, like what are the RBI will be primarily more interested to look into that when they come for the review in case as a part of your regular audits, audit reports for all the outsourcing partner. Not only that, but also the closure, that what are the points have been reported during the audit, that are they being closed or there is a timelines for the closure, right? And in case if the certain points are not getting closed because of the very technical reason or because of the any particular reason, right? You need to have the exception mechanism or the item has been added into the risk. So correlation, right? That's where the entire the governance structure comes into the place, guys, right? A third party certification, you can, that's where the circular is also emphasis that in case if any applicable, the third party certification is there in that particular segment, like say, for example, ATM switch provider. So they may have the PCI DSS certification. So you should have the PCI DSS certification or ISO certified certification from them, right? Create a performance review report. So keep a record of all the performance review that you may have do that, and also assessment report for your cloud service provider, the SOCs partners. So some of the specific area where that you may be doing the regular assessment need to have that records available. The last probably is a more of the exit strategy. So you need to build a complete exit strategy, which include that your BC plan, business continuity plan, when the exit comes, or in case in between the contract has to be exited, that how you're going to do the recovery or the continuity operation. So this is more from your side, your business side, that how you're going to continue to do that. And what are the arrangement that you will have in case if any contract has to be terminated in between for whatever the reason, right? So what you're supposed to do, create an exit strategy, define the time period for the executing those strategies, define the termination process, that because termination process is not easy, right? You need to have the backup arrangement in the back end so that your operation should not get impacted. And then primarily the checklist, your exit reports for the terminated contract, BCP exit approach for the critical partners, right? So these are some of the elements are there. So that's all the controls are there. So again, primarily this was more to from my side to give you some kind of guidance that in each of the areas, what are the you are supposed to do, what action plan that you may have, and then what are the typical checklists that you should be worried about. Again, disclaimer that's not comprehensive, right? Because when we engage and when we look into the ground, then typically then it may be a little wider, right? But it's just some kind of the framework or kind of the guidance that I wanted to give you guys so that you can understand that, okay, go back and look at that, what are the things that you need to support. And else that we are anyway, we are there. If in case anyone you want to engage with us, want to talk to us to get deeper understanding into that, deeper understanding that what are the, how do you go about the compliance, we are there to engage with you guys. So again, before I pick up the questions, request you to please share your feedback. So share the feedback, we'll share the PPT back with you. So I'll just see if any questions are there. Madhav Chablani, okay, so any clarity on the qualification of auditor? So Madhav, with as early, like especially when you look at the cyber security audits and all these things are concerned, where that RBI emphasize on the certain panel auditors and all this thing, here it's not suggesting anything. It's just asking that either it could be your internal or any external audit partner who you can engage, who should have the sufficient experience and understanding to perform that kind of the audit. So not very specifically as part of this circular, but in case we are looking for the deep security audit, definitely they emphasize on the certain panel, but not here. Ganesh, I think I missed out one of the questions. Umang is asking applicable for neobank and marketplace player. Okay, very important pointer, Umang. So if you look at this guidelines, so they are the applicable section and non-applicable section. RBI has very categorically called out that any fintech partnership, which will include the neo-banking partnership or any market player partnership, those will be treated as a financial outsourcing, and that need to be treated as a part of the circular, which is there for the master direction on the management of the financial outsourcing partner, not with respect to this guideline. So that's the very clear clarification that they have put in place. And Ganesh Vaidya is asking question that DRBCP will be mandatory for the SaaS-based platforms. Currently, it is a challenge to obtain these details, especially where it is shared environment. Yes, undoubtedly very rightly pointed out, and some of these elements of the cloud side also, where that RBI has very clearly called out that these are elements has to be there. I think that where some challenges are expected to be there, right? But I'm sure that many of the players who want to operate into the regulated framework, regulated environment in the country, and since the largest section of the REs is coming under the gamut of this guidelines, I think many of the guys will slowly will adhere to that, right? So at this stage, definitely, but many of the SaaS players have started providing kind of the BCP DR landscape or the architecture, that how they architecturally they are managed at the different clouds. What are their what cloud that they have the BCP primary side, which cloud they have the DR side, and how do they take care of the replication and all these things. Majority the large player will have, some of the small players may have challenge, but I think slowly everybody will get it in. Because now control is guidelines is very clearly there, right? So that's there, right? So any question, guys? I'm there, right? So that was all from my side. That's what I want to talk about. If you want to refer to our previous, where that I've gone into deeper into the overview of the requirement side of the guidelines, you can refer to our YouTube channels on the digital fifth that you can refer. This was more on the you as an RE, what are the approach that you need to figure. Again, sincere request that please share your feedback. Feedback is very critical to us, guys. And we'll share this comprehensive deck that we have prepared. We'll share with the participant. Any question, guys? I'm there, or anything anybody want to share? Please share, or you want to raise hand, you want to talk about, you want to share any experience. Very happy. See, if not, guys, then thank you for taking out time on the Friday afternoon, and keep looking at every week, same time, we keep on coming with a knowledge session in the knowledge session on a different topics. But thank you, Sendil, for your feedback. It's always helpful, right? Thank you. Harshwala, how do you draft penalty clause in agreement? I know it's a very tricky question, right? The moment you talk about the penalty, the commercial arrangement changes. So that's definitely a difficult part. Maybe we'll help you out offline that how do you draft the penalty clauses, but it's not easy, yeah, right? So thank you, guys. Thank you for taking our time. Thank you very much.